Well, good afternoon. Good afternoon and welcome. Welcome to another Webinar Wednesday hosted by CSU Bakersfield Small Business Development Center. Good afternoon, I'm Kelly Bearden. I'm your host today and the director of the SBDC locally here. And we're here for our 100th in the series of Managing Your Small Business Beyond the Pandemic webinar. So got some great guests today to jump in and a lot to talk about. It's going to be fun kind of going through a weekly webinar, 100 consecutive Wednesdays like we've done. I think we've had some luck and some other things to pull that off, but let's get going. So what is up today? What is happening today on this date, February the 9th? Well, the Kern Micro Grant Program, which is kind of spun off from the state of California, the County of Kern applied for that micro grant, has begun. We've started taking applications and start processing them as of February 7th. So as of Monday, so we'll continue to update you and I'll have a little bit more on that before we get going. Our special guest today, Keith Brice, is going to talk about the state of small business lending, the changes, what to look forward to in 2022, as we hopefully move beyond this pandemic and get back to some form of normalcy. That is going to be where small business lending kicks in to help us grow our businesses. We're going to look at the pandemic relief program and a lot of those things that are open right now. We're going to jump in a few moments and do a quick look at the Access Plus Capital Nano Loan Program and much more. We'll take your questions at the conclusion of today's webinar presentations. And also we have a poll. So let's start with one whimsical. I know at times you guys like to have a whimsical, rather non-serious, only one poll question today, but it is going to kind of reflect what has happened over the last 100 Wednesdays. So what we have is, we have a webinar poll question we're going to ask, and it's based on state recognized holidays. Which one has not hosted, or which one has not occurred on a webinar Wednesday? So did we have webinar Wednesday on Veterans Day, Cesar Chavez Day? Did we have it on Christmas? Did we have it on Admissions Day, Indigenous Peoples Day? So we're looking at the day that it did not happen on. The one holiday that was, pretty much out there that was going to make it very difficult to have webinar Wednesday. And really, we wouldn't be here 100 weeks if, perhaps if it fell on this holiday. An easy, nice layup poll question for you. I know you appreciate it, but just something a little whimsical to get the show going today. So we'll give you another couple of minutes. We're looking for the holiday that we did not have a live webinar Wednesday. And we're going to give you another couple minutes or moments to jump into the poll and end it. And we have about 57% of you that have participated in today's poll. So thank you for participating. And we're going to jump in and end that poll and share the results with you. And 67% of you say Christmas Day. And that is correct. If Webinar Wednesday likely would have happened on a Christmas Day, if Christmas would have been on a Wednesday the last 2 years, we would not have likely been here. But we have been here on Veterans Day. Veterans Day in 2020 had the great Mr. Veteran of Kern County, Dick Taylor, on that day. And we also focused on a lot of Latinx programs and how we could better serve the community, and programs on Cesar Chavez Day. We also have been here on Admissions Day and Indigenous Peoples Day, or Columbus Day. It's ironic also, there's been a number of eves that we've been here on. They don't count as a holiday, I know, but we've been here on a couple of Thanksgiving Eves, and we've been here also on a New Year's Eve and a Christmas Eve. So here for you all the time and anytime at that particular moment. So thank you for participating in that particular poll. We'll bring this Zoom back up here and keep going. So this is kind of a graphic that made me think of the 100 weeks of the webinar that we've gone through, and really finding that that's a sign that we still see. It's not one of our local businesses. I didn't want to get involved in all that, but it is, yes, masks are still required. And so kind of kind of the outlook as we kind of are going, but we're moving beyond this, it looks like it. So things are really positive looking forward. Remember, this pandemic, at least from the standpoint of Major League Baseball, was going to last 14 days. They originally suspended operations in March of 2020 for 14 days. The original PPP, the Paycheck Protection Program, was for 56 days over 8 weeks, and we found that that had to be extended much larger and much longer. So hopefully this mask thing is about ready to be a thing of the past as well. So there's for some positive thoughts. So what's happening with our update? Here's our update for what is going on with the key relief programs right now. So a lot of the key relief programs, we still have open the Employee Retention Credit, which is retroactive back to Q4 of 2020. It did officially end on September 30th, 2021 with the passage of the infrastructure bill, which ended that. But it's still open, you want to check on that. The city of Bakersfield has the Restart Loan to Grant program. We also are going to talk a little bit more about the Kern Micro Grant program, which just recently opened. Also last week, we learned about Mono County, and they have a Mono County Grant and Forgivable Loan program. It is open. They have a consultant to contact, a gentleman by the name of Jeff Lucas, and we'll try to get as many of these resources as always into the particular chat box today. So if you have questions for us today, please go to the Q&A box and put the questions in there. And we'll put a lot of resources today in the particular chat box and go from there. So also, we mentioned a little earlier about the nano loan program. And this is a loan program that is with Access Plus Capital. And I'd like to do a quick pop in today with Pamela Mostert, and Pamela Mostert is with Access Plus Capital because she can describe this program a lot better than I can. So Pam, please jump in and take it away.
Thank you so much, Kelly, for allowing Access Plus Capital to share this program with you. And if I could share my screen. Okay, so just a brief commercial for Access Plus Capital. We are a CDFI. We're located, we do have an office in Fresno at the Self-Help Credit Union on H Street, downtown Bakersfield. And we service 14 counties, very similar to, Kelly, what your SBDC covers. And our mission is to eliminate economic barriers to financial success through fair and equitable community investment. In our nano loan program. And this came about as one of the barriers we found with a lot of small business applicants was credit. And credit seemed to be a hard challenge for them to overcome. So this is how the nano loan program was conceived. It is a credit builder product, and I'll talk briefly about the credit scores that we do allow for this program, but it is also a bridge loan to other loan products that we do have, or even traditional financing with banks. This is located specifically in Fresno, Kern, and Stanislaus counties, and it's based on a tier of $5,000 to $20,000. We're not a credit score lender, but we do look at credit. So if there's some undischarged bankruptcies or unsettled judgments, including tax liens, they're not allowed. However, we will look at it if we do have a payment plan in works. We do allow this for any type of purpose, including working capital, and we do just take a UCC1 filing. There is a 2% origination fee, which can be factored in the loan itself, so no out-of-pocket expenses. And thanks to a grant from Wells Fargo, we're able to offer this program at 3%, which is pretty amazing. We do a loan to ITIN borrowers as well, and the timeline is about a week from application to funding. So it's a quick process. So here's the credit score minimum. So 550. All the way up to 680 or above. So based on your actual credit score would determine how much you're eligible for. So on the lower end, 5,000 all the way up to 20,000. And we will go as high as 48 months on the payment terms. There is no prepayment penalty, so this loan can be paid off at any time. And it does have very minimal documentation. So either 3 months of the most recent bank statements, 1 year tax return, or an interim financial is all you need to make this loan happen for you. So the purpose is to get the money quick and in your hands and with little to do. So a little bit how you can get a hold of us. We're at Access Plus Capital at www.accesspluscapital.com. And again, we're located in the city of Bakersfield as well as Fresno. So thank you, Kelly, very much.
Well, thank you, Pamela. And we're really excited about this program because we see it having some leveraging capabilities with our Kern micro grant program that we're going to talk about in just a minute or so.
Absolutely.
So beyond that, beyond the nano program, the California Dream Fund is something we'll be talking about in the next few weeks. As more is learned on this particular program, it's grants to new businesses. And there'll be other grants to new businesses with this small business venture fund. And then we get down to PPP forgiveness. I know some of you still are going through that process. The EIDL loan is closed. The EIDL loan is closed, but you can still get an increase in your EIDL if you have an existing economic injury disaster loan or reconsideration. And also the EIDL targeted advance that was made a $10,000 advance in 2021 to individuals in certain census tracts that were lower income is now closed. Reconsideration, if you did apply, or you were applied and turned down, reconsideration ends on 12/15. So next Tuesday is the last day to get your reconsideration approved. So that is a timely and critical issue if you are going through that particular issue. Real quick again, we're really been talking a lot about the Kern County Small Business Micro Grant. It is open to the first eligible 394 business applicants that meet the eligibility requirements and are approved. Again, these rules come down from the state of California. The county of Kern was intuitive enough to actually apply for these funds and receive this $1.2 million to help our smallest and oftentimes our neediest businesses. So the entire county is represented. We are starting to work on outreach in rural areas to target and get those individuals in. The grant is up to $2,500 per business. You had to be in business in 2019 and have less than 5 full-time equivalent employees. And also the last requirement is that your revenues, your gross sales, your revenues for the year 2019 had to be less than $50,000. So it must also, this is one of the issues that we see is just started to come up in the last day or two, is that in the program, the nice, real thick guide that we have on this is that it must be your main source of income for the individual applicant. So if you're a side hustle, it's not going to work most likely. If you have another job that you produce more income than your micro business, this is for the smallest and neediest businesses that work all the way down. You also could not have received the California Micro Grant Program through lendistry.com. Very popular program in 2021. And a lot of individuals were able to get, in this size of, we're looking at $5,000. If you received a $5,000 grant through Lendistry and went through their portal, those will be matched and you cannot actually receive that because the state recognizes that you received the actual grant program rather than the micro grant. Also, you cannot actually be a nonprofit. So it's not open for nonprofit entities. If you have 10% or more ownership, you're going to have to disclose that. And there could be some legal character background questions on the application. We're encouraging you to contact us at 661-654-2856 for more information. Calling really has kind of been working out as the best way. We can walk you through the eligibility questions I just went through. We'll be talking about this program also in the next few months. Is 1.1 billion is coming to California for some lending programs. These are going to be loans. They're not going to be grants. They need to be paid back, as that is the direction where most things are going. We'll talk a little bit about their venture. Also coming up, KITE, the Kern Initiative for Talent and Entrepreneurship, and the Kern Venture Group have partnered with the Bakersfield Women's Conference, and they're going to be awarding $6,000 to 3 different lucky winners that actually pitch during the late April Bakersfield Women Conference, a great event held annually, usually here in Bakersfield. So it's open to entrepreneurs, local businesses, startups, and also your side hustle will work here. They have the opportunity to pitch their business at the conference and win some of those cash prizes. The applications are open until February 18th, 2022. And they include the following entities: organizations that are looking for startup or growth stage entrepreneurs with an idea, and you have to be older than 18 years of age. I would contact the KITE information, or we can provide that information. Hopefully get these links up here for the power pitch, and also the Bakersfield Women's Conference in the chat box today, so you can pull that out. The California Dream Fund, we mentioned we'll be talking about that. I mentioned the EIDL targeted advance reconsiderations in next week. If you want to still apply, EIDL is still open if you're going through the reconsideration process. If you were originally denied, you can still go through reconsiderations, and you can still try to turn that negative into a positive, that no into a yes. You need to provide some information. So there's some of the information that you will need to provide and to get your reconsideration, and also increases. You can still increase if you have a need to increase the size of your EIDL program. Okay, right on time for once. This is amazing. Our special guest is, if you've been around for the last 100 weeks, is somebody that you've learned and know very well. It's Mr. Keith Brice of Mid-State Development Corporation. He is the president, and actually Mid-State Development is pre-pandemic. I don't know where it is now, but I used to refer to them as the largest SBA lender in Kern County. And he will talk about the unique product that they have and a lot of other things regarding the state of small business lending. Keith earned his bachelor's degree from University of Dayton. It's gone through the California Intermediate Banking School, Pacific Coast Banking School, both really industry schools, institutions in the particularly banking industry. Also has done, I believe now, over $500 million in loans since Mid-State's inception, creating thousands and thousands of jobs here in Kern County. Keith is also the recipient of the prestigious John Brock Award, which is given annually to the person who amplifies community involvement and community service throughout the Bakersfield and Kern County communities. Keith, always a pleasure to have you here. Great to see you on the other side of the building here today. Thank you and welcome.
Thank you, Kelly. Somehow I've been doing these enough with you. I got the Ed McMahon vibe going on. Those that are under 50, you have to Google who Ed McMahon is. But I always appreciate being on these webinars to talk about things I'm passionate about. Pamela, it was great to hear about the nano program. One of my quick takeaways that I always get when I do these webinars, or more importantly, when I listen into these webinars, is there is an abundance of resources out there for small businesses. You know, given my age, I can go back to the time period where there were just limited, you can only get a commercial loan and that's all you get. Between the grants and the microloans, there are a lot of resources and opportunities for small businesses to get some financing. So what I want to cover today, and I'm going to try to share my screen here real quick. Hold on one second. Okay, here we go. We're going to talk about the current lending environment. I'm out in the community quite a bit, and more importantly, I feel that I got a pretty good grasp of what's going on and what I think that's going to happen going forward. So let's go ahead and start this from the beginning. Okay. First thing, what to expect after the stimulus money is gone. And this is what lenders are saying. A lot of businesses have moved on from the stimulus money. Kelly mentioned the idle reconsiderations out there, which is a somewhat of a stimulus program. One of my takeaways from that is there are still funds available, because I get a email daily on applying for idle reconsideration. So if you have been turned down, or if you're looking at an increase, there is that window. Please take advantage of that. Lenders are also saying is, there's a demand now for non-stimulus business loans. A lot of these businesses had taken advantage of the PPP, the idle, but now they're looking at moving forward. They're looking at the economy picking up, which is driving consumer spending, and it's encouraging a lot of our customers to bulk up on inventory, and there's a lot of optimism going in on 2022. They're also saying an increase in commercial and industrial loans to the back end of 2021 and the start of 2022. So what that is lenders are seeing they had great activity towards the end of 2021, and they're starting off with a tremendous pipeline. I know at Midstate we have a great pipeline of projects. People are rebuilding their inventories. They're starting to make business investments ahead of the consumer spend. The economic growth, we're seeing a lot of good things coming out. One of the trump cards is the Feds, what the Fed will do in the rate activity. Now, I will tell you, banks will also benefit if the Fed comes through with the 4 hikes expected this year. That's going to boost their net interest income. That's the difference between the interest earned on loans and paid out on deposits. Also, the banks indicated they made a lot of money on PPP. So we'll actually touch on that a little bit later on. So again, what to expect after the stimulus money is gone? Loans. Lenders are flush with deposits, either from consumers or business savings. Just one side note, I mentioned this to Kelly the other day. A lot of the banks have benefited from the increase in deposits. A lot of those deposits are PPP monies that were used for the proper purposes, but we had some small businesses that did have cash, so they're seeing an increase. The other thing that came out of this pandemic, and everybody's been seeing it on the online shopping, is the online delivery of loans. It's cheaper and it's more profitable for the lender, not necessarily for the borrower. Fintech, you've heard us talk about it. Well, Fintech's here to stay, and that's what the lending community understands. It's a new competitor that's also motivating traditional financial firms to invest in technology and pay attention to changing trends among their customers. All new and incumbent players are impacted by the changes that we're seeing happening in the marketplace. But you need to understand what a fintech is. And Kelly asked me to maybe explain that a little bit. Again, the fintech effect. While the term fintech has been around for years, it's important to understand the industry in the face of a rapidly advancing technology and the multitude of new players. There are new fintech players coming on every week. The financial technology industry encompasses technology-enabled firms offering financial services, as well as entities providing technology services directly to financial institutions. Talk about that a little bit more. Fintech companies employ technology to support financial transactions. We all know about PayPal and Venmo, and there are other fintech applications that businesses and consumers are using. The technology advances the changing demand for financial products. Things are changing as we speak. What borrowers, business owners, and Consumers are demanding now. That's feeding into the new wave of new fintech companies coming up aboard. So I'm going to read the actual description of fintech, because everybody, you know, they think they know what it is, but this is one of the best descriptions that I found. It's digital lending refers to technology-driven non-bank lending. Access to expansive data, keep in mind data is the key, sophisticated algorithms and considerable computing power enable companies to compete with traditional banks by providing appealing new offerings to new would-be borrowers. They dominate the internet media platforms on advertising. Offerings range from consumer and student loans to small business loans. We're going to talk primarily about small business loans, a little bit about equipment financing and lines of credit. Digital lending companies match borrowers with lender, thereby benefiting from loan relationships and processing transactions. So some of the fintech companies are basically they're data companies that will connect you with the source, and that source very well may be a traditional bank, or it may be a private lender or a private fund. Direct lenders, there are two types of fintech or digital lenders. They have two primary business models. Direct lenders that originate loans to hold in their portfolio and are referred to as balance sheet lenders. And then platform or marketplace lenders. They partner with depository institutions, that could be bank or even credit unions, to originate loans which are then purchased by those particular lenders or an investor. And you'll see why in a few minutes, why it's an interesting product for a traditional lender to acquire or an investor. So that's the fintech definition. Again, the term's been thrown about. I know Kelly has talked about it. I know for the last probably 99 webinars that he's done. So you know about fintech. Now I want to talk about how to choose the best small business loan. It was good that we had Pamela on earlier from Access Capital, because that nano loan, which is a credit builder loan, is a real good bridge for some of these other loans that I'm going to talk about and some of these other products that are available. Funding options for qualified business owners include bank loans, SBA loans, which we do here, we'll talk about, term loans, business lines of credit, invoice factoring, and equipment financing. We'll talk about invoice factoring and a little bit of equipment financing later on. Typically, you need at least a year or more history and revenue to qualify for financing. Again, not talking about startups. Kelly alluded to some startups. There are some other financing options for this. This is primarily for businesses that are up and running. Choose the best small business loan. The best loan for your small business will depend on a variety of factors, such as, you know, why you need the funding, how fast you need to access the capital. That's important. How much capital you need, your business qualifications. You know, I like the grid that Access Capital had in the credit scoring, which sort of, it's a qualifications. The traditional lenders don't necessarily use that type of grid, but there is a grid. And then the total cost of debt, that's important. Time may impact your cost of debt. Your business qualification may impact your cost of debt. So we'll get into that in a minute. Traditional banks can offer a variety of types of small business financing, including term loans, SBA loans, lines of credit. To qualify for a bank loan, you typically need a strong personal credit score. Again, I couldn't have asked for Access Capital to talk about the nano. That's one way of improving credit scores. Also, they look for several years of business and a solid track record of business financing such as strong cash flow. In some cases, depending on the type of loan, they're going to require collateral. Use the amount between 100,000 and 10 million. Again, looking at small businesses, you may have small businesses that need a little smaller amount, or they need a larger amount. There are platforms within the bank to deal with that. APR, approximate interest rates, 2.54 to 7%. Again, this is traditional bank loans. It's best for working capital, expanding your business. Just a little few the lenders in the community, large banks. They have, Bank of America, Chase, Wells, Mechanics Union, and PNC. PNC is the new player in town. They bought in Bakersfield. They bought the BBVA Compass Bank. Then you have your community banks, Bank of Sierra, Mission Bank, Tri-County, Valley Strong, and Valley Republic and Valley Strong Credit Union. I refer to them as a bank. They are a credit union, but they're offering a lot of typical commercial lending programs. Very good opportunity there. SBA loans, we do those here. That's a loan, obviously, we've talked about that. It's guaranteed by the SBA. They offer lower interest rates and a longer term payment. The process is time consuming and the requirements are fairly strict. So most of those with good personal credit, although there are some SBA lenders that will look at lower score requirements, but we also look at strong business financing and the flexibility to wait for funding. Again, most SBA loans will take a little bit to process, but the rate and the amount are well worth it. Loan amounts go from 30,000 for the smaller loans up to 5 million, and where you look at is the APR is from 3.5% to 8%. Best for large one-time or longer-term investments, purchasing real estate equipment or buying business and refinancing debt. Again, the same players that I mentioned. There are SBA lenders. Kelly had showed me a list of most volume SBA lenders last year, and you have some specific SBA lenders like Live Oak Bank I think they're out of San Diego. Business term loans, this again, get into a little bit of the Fintech. 500,000 is probably the highest that you'll see at a Fintech loan, but as they've gotten so much success in being able to deliver capital, I see that bar bumping up more and more. I will tell you that the regulatory community is somewhat embracing the Fintech lenders because of their ability to provide capital, especially the PPP loan over the last year and a half. They were a good active player in that, and they have gotten into a little bit better favor with the regulatory bodies. The challenge is if you look at the APR with fintechs, typically a low at 9, but some of them up to 99%. So typical fintech lenders, and this is just small sampling of them. Cabbage, Full Circle, On Deck, Fundbox, Credibility Capital, and Triton Capital. I think Triton Capital specializes in equipment. Business lines of credit, again, talking about the type of financing out there for small businesses. Usually the credit lines run from 6,000 to 250,000. APRs 5% to 99%. Obviously, they're best used for cash flow, handling unexpected expenses, and financing short-term debt. I will tell you the kiss of death with a lender is to go in and make a request for a line of credit, and it's an old story, but how much do you want? And the response is how much can I get? Well, you got to know what you're using it for. So you can get an approved high limit, but have a feeling for what you're trying to use the money and what your actual needs are. Bigger banks, community banks will play in this pool a little bit, but they'll try to deliver it. It's fairly as efficient. And then obviously the fintech lenders are also in that market. Invoice factoring and invoice financing. That is, it's a way of business owners that they can take their unpaid invoices and turn into immediate cash. It is a margin killer. So you better maintain a fairly efficient margin in your service, or when you do the price point of what the charges on the invoice lender is, you may have given up most of your profit. Their banks will also do factoring on a larger scale because the touch points and the cost of the bank is pretty significant. But a lot of smaller operators out there, Blue Vine, eCapital, Altline, Triumph Capital, and TCI Business, they're invoice factoring. It's, again, buyer beware, and make sure that you can, if you're going to go down that road, the need far outweighs the cost of doing it. Equipment financing, not going to get into a lot of the details on this. Typically they range from 4% to 30% in the interest rate. Again, you know, the rates are higher when you go to fintech lenders, or even some of the leasing companies that are effectively equipment financing. We always encourage you to look at a traditional lender if you can, if your credit and your cash flow and your financial history supports that. But there's also SBA options that would reduce your costs. With equipment financing, we always try to match the equipment with the revenue. So if you're buying, whether it's a new tractor or a new lathe machine, then the new piece of equipment is going to generate XYZ and additional revenue. That's the only way to look at it, unless you're replacing a piece of equipment for greater efficiencies. Additional funding options. There's always, if you are structured better personally, to get a personal loan. You may be pulling equity out of your home, doing a equity line of credit. Your personal credit score may be better, so that might be an option. And there's always the business credit card, where I'm seeing more and more of that. Businesses take advantage of that, and that's primarily with the cash back and the rewards and the travel points. Those are really valuable if you get with the right card, and if you do enough of the volume and you have the discipline to pay it within a timely manner. The cash back and the travel points, I'm sorry, really do justify going that route for certain purchases and certain activities. Real quick, my commercial, who we are, Mid-States, a not-for-profit organization established in 1980. We offer what's called the SBA 504 loan. Our funds are received through the issuance of debentures. Those debentures are guaranteed by the SBA. We are an active CDC. We have a great pipeline right now. The 504 loan product is for commercial businesses expanding. Fixed rate, our last fixed rate was 3.21 on a 25-year note. We do 20, 25, and 10-year. Long-term below market. Equity injection on most projects is 10%. Bank does 90%, can do up to 90%. Also, the banks can participate in larger projects. We participate with the bank. Bank has a 50% loan to value. There are disadvantages, as I think Pamela mentioned. They didn't have any prepayments on the nano. We do have a prepayment penalty on our fixed rate product, which is within the first 10 years, and you cannot prepay, nor do we allow investor projects. Typical structure, bank, private lender, finance company, they'll have 50%, we have 40, and you have 10% equity injection. I use this example, just shows you can get a $500,000 project for 10% down, and I used a higher rate, and shows you where your payments are. For-profit businesses, we do not deal with nonprofits. There are net worth requirements, net profitability. Most small businesses will meet this category. We can go up to 5 million, then 5.5 with manufacturers. Our projects range from 125,000 to 18 million. Ineligible nonprofit, mentioned that. Prior default on federal loans, banks, gambling concerns in private clubs. Occupancy requirements, 60%, land improvements. We finance part of the remodel, and we do equipment. So you can do equipment at a 10% equity at a 10-year life. We do require personal guarantees. We do very few startups, but if there's a startup or special purpose, we do require a 15% equity injection. And I'm gonna just go through here real quick. Some of the special purposes, properties, cold storages, car wash. We do a lot of car washes. We do a lot of urgent care centers, and we do a lot of hotels. And that is it. So with that, I'm gonna stop my share. And Kelly, that went as fast as I could humanly possibly go.
Fantastic. Hey, let's have a little discussion. You know, I kind of miss that. So oftentimes we're just across the table from each other, and when COVID gets a little worse, we hang out in different sides of the room. So one thing, I'm fascinated by this advancement of fintechs, because, you know, I remember when we would do our capital summits, when we used to be able to do in-person conferences and workshops, you know, 3-4 years ago, the fintechs were the ones charging 49%. And now they've evolved. They've evolved partly because I think of PPP. 3 of the top 10 lenders in the second round of PPP were fintechs, maybe more. So where are fintechs fitting in to, say, our community lenders and are also our regional lenders?
So one of the reasons why I spent a little time on fintech is they are the fastest growth in the financial sectors. So what we're finding, and what I'm hearing, is that the lending, the traditional lending community, you know, in many cases they are funding some of the fintech operations. I mean, if you peel back the onion from a lot of the fintech companies, you'll see that their access to capital is with larger banks. You are going to see some of the independent banks embrace that fintech platform, because it's all about data and it's all about delivery. But more importantly, it's all about the margin, because, you know, albeit some of the price points on the fintech capital is going down, you know, you're still looking at, you know, 10 to 100% in interest margins, that if you're a lender with a lot of capital out there, you know, why not embrace or buy off a block of fintech financing? The funny thing is the end user, the borrower, now is expecting to be able to apply for financing at home online, and that was the sweet spot for the fintech lenders. During the PPP rollout, a lot of the lenders, the traditional lenders, didn't have that platform. They've since developed that. So we'll see more and more of your traditional lenders embracing the fintech easy application. Now, having said that, you know, there is always been a warm spot in my heart for traditional community-based lending. And, you know, with that, you pay a more of a price for time, but not necessarily a price for your product, and more of an understanding of what your business needs may be going forward in the future. Whereas fintech is strictly a transactional, boom, this is what you need today, not what you're going to need necessarily tomorrow.
Now, another evolution we're seeing that kind of ties to fintech with some of these firms, but it's the community development financial institutions,
Right.
the CDFIs,
Mm-hmm.
of course, of which is
Access
the designation of Access Plus. So we're seeing more, and we're seeing more discussions on formations, and we're hearing of just a lot of federal money coming from DC that is going to be supporting the mission, and that is going to be for smaller loans that are harder to get. Where do you see CDFIs going in the next year and a half?
Well, there's a couple that are coming out of the ground that you and I are aware of. It's always been a need in the community, and specifically in Kern County. That's why, you know, Access is here. That there's always that need for the smaller loans that you know, a traditional lending source wouldn't touch, because quite frankly, they couldn't make enough money when they factored in, you know, how many touches that somebody had to do on a product. So CDFI has been the way to go to deliver those smaller lending needs to the small business community.
Great. Also, we have strong community and regional lenders here. I'd start naming them, but I'd leave somebody out. But we do have a number of strong community banks that are engaged and active in small business lending. And where do you see them fitting in with the emergence of fintech, and also being able to work with CDFIs and complement what CDFIs do?
Well, what I would anticipate is that you would probably see the smaller type of funding needs driven to a CDFI or a fintech type of product, because it's a little more efficient, because it's all data driven, and where the community banks will continue to have in their sweet spot is that need for that client that has a larger need than a $50,000 line of credit. They need to buy a commercial building. They need to buy equipment. They need to some working capital. So that sweet spot's always going to be there. I think that the delivery is going to be a little bit more efficient. The one thing that PPP did shine a light on is you had to have a delivery system that could efficiently fund a borrower's request fairly quickly.
Yeah, and community lenders, they're such a valuable asset
Absolutely.
to the community. And really, you know, for growing business, it's, you know, a fintech's a transaction, it's a loan.
That's all it is.
As a community banking relationship is a relationship.
Right.
So they do everything and work with everybody and help to grow with you. So that only leaves the major lenders and a lot of the stuff that's going on with major lenders. So we're already starting to see some of them get more involved in this fintech kind of area. So one thing, and I hate to focus this much on fintechs, but one last thing before I leave is during the pandemic, we saw a focus on specific industry that were targeted by certain fintechs. And I'm talking about CPAs and biz to credit, to where they created a portal and an avenue for CPAs to go directly with a lender. Do you see other industries perhaps getting into that and having that relationships?
Yeah. Again, it's that ease of delivery. So in the case that you're talking about is that was primarily the PPP delivery and the relationships that the fintechs did with some of the CPA firms, and it made it easier for them to assist their clients. So yeah, I see, again, everything's moving at warp speed. I think you're going to have more and more access to specific platforms that the lending community would have, and tied relationships to the source of loans, and that may be a direct CPA referral type of business.
Fantastic. Well, let's jump in and look at a couple of the questions that are out there. They're not related much to lending. Where can I find the application? And I believe you're either talking about the application for the nano program or the application for the California Micro Relief Grant administered here locally in Kern County. So let me start with the micro grant application. What we encourage people to do is to call our office. I believe the number is in the chat. I mentioned it earlier, 661-654-2856. And what we do is we just kind of go through the eligibility. And if we go through that eligibility and you hit those buttons, we immediately email you out an application, and then gives you the opportunity to process that. So with that, the application has been changing. It's a newer program. It's amazing how complicated it is, how easy it sounds trying to distribute $2,500 grants, but it is complicated because there's so many different issues. It's a smaller scale of what we saw kind of with the PPP program, where you get so many different instances and there's so many different interim final rules and rule changes and et cetera, that kind of dominated a lot of the first few dozen weeks of the webinars. So hopefully that answered your question on the California Micro Relief. What about the California Dream Fund application? That will be coming out in a couple of weeks. I anticipate probably around the 1st of March, there should be hopefully maybe an application process. Again, even though they are smaller programs, they are incredibly complex, and there's a lot to deal with. If you heard when we talked about the California Dream Fund a few weeks ago, the gauge and the reaction that we got in the response was substantial, bordering on enormous. And it seems like the California Relief Grant Program was the same way, whereas there wasn't enough money to meet the initial need. So hopefully we're going to see additional funds being added to the California Dream Fund. It is a statewide program for $35 million. And when that application is out, I would assume we'll be talking about that on about webinar 102. So that's it for, do you have a representative at the SBDC who can help us with workers' comp? Absolutely. We have a great risk management consultant, and he'd be happy to meet with you. Probably right now still over Zoom or by phone, but yes, you can go to our website and sign up for SBDC services and ask to speak to our risk management professional. Any other questions pop up? See any? Got the chat taken care of. Wow, Keith, this could be the first time ever that that I'm going to let you out of here a couple minutes early. So it's been a great ride. I just got to thank you so much for early on being there and helping us when everything was so crazy, and working through all of the technical issues and working with so many small businesses. I mean, we handled literally thousands of inquiries from businesses, but so did you. And it wasn't really your line of work with the SBA 504 program being predominant. But big thanks to you, Mr. Brice, and also a big thanks to a person who's been around for the whole ride, and that's Maureen Busher-Dang, who's produced and been in the backdrop and dropped, yes, hearty congratulations and thanks. Could not have been here 100 weeks without her on this particular webinar, and it's only fitting. Everything would go so smoothly and we get out a minute or two early. So we will be back next week for webinar number 101. I imagine we will get into the latest. I think it's going to be kind of a deeper dive into a lot of the things, maybe a little bit more information on the California Dream Fund, some of the monies that are coming from the ARPA, the last stimulus round that had $10 billion going to states across the country for lending programs. When those get more clearly identified, we will talk about that and talk about what's coming there and a few other things, and give you an update on the California Micro Relief Grant here administered locally in Kern County. So for Maureen Busher-Dang, I'm going to let Keith give his own goodbyes, but I'm Kelly Bearden, and we'll see you next week. Keith?
See you guys. Good
Take care,
luck.
everyone. Bye-bye now.